Welcome to County Portal, your simple source for local government services and public records. Let's get started.
Today, we're breaking down state and local withholding elections, a crucial piece of your payroll paperwork that directly impacts your take-home pay. When you start a new job, you tell your employer how much tax to take out of your paycheck. While most people think of the federal Form W-4, it's just as important to pay attention to the forms for your state and sometimes even your city or county. Think of these as the local cousins to the W-4. Many states have their own specific form, like California's DE-4 or New York's IT-2104, that serves the exact same purpose, to calculate the right amount of state income tax to withhold from each paycheck. Getting this right is a big deal. If you have too little tax withheld, you could face a surprise tax bill and potential penalties when you file your annual return. On the other hand, if you have too much withheld, you're essentially giving the government an interest-free loan with your own money, which you won't see again until you get a refund months later. The goal is to withhold an amount as close as possible to what you'll actually owe. So, what's on these forms? They typically ask for your personal information, your filing status, like single or married filing jointly, and the number of allowances or dependents you want to claim. This is the key part. The more allowances you claim, which usually correspond to dependents or certain tax credits, the less tax your employer will take out of your check. The fewer allowances you claim, the more tax will be withheld. You might also find a line to request an additional dollar amount to be withheld from each paycheck. This is useful if you have a side gig, other income, or simply want to be sure you're covered. Some people may even be able to claim an exemption from withholding entirely, but only if they meet very specific, strict criteria. Don't forget that some areas also have local income taxes, which might require a completely separate withholding form. Your employer's HR or payroll department should provide you with all the necessary paperwork for your specific location. The best part is that your withholding election isn't permanent. You can and should update it whenever you have a major life event. Getting married, having a baby, buying a home, or a change in your spouse's employment are all great reasons to submit a new form to your employer to ensure your withholding is still accurate for your new circumstances. Thanks so much for watching. If this video helped you understand state and local withholding a little better, please give it a thumbs up and subscribe to our channel for more simple explanations on personal finance topics. Remember, this information is for educational purposes, and it's always a good idea to consult